Welcome to Wealth Matters Podcast. I have with me Kirk Du Plessis. Kirk is a full-time options trader, real estate investor, stay-at-home dad, and trading coach. And he's part of Options Alpha team. Kirk, go ahead and please, introduce yourself.
Yeah, I appreciate you having me on. I think you covered the big basics. Dad, trader, investor, CEO of Option Alpha. So yeah.
Awesome. So yeah, we have someone who can talk about stocks, options as well as real estate. So I'm looking forward to this episode. Hope he can convince me to go back to option trading.
That's my goal. Let's see if we can do it. Yeah.
Let's see. So tell us something interesting about yourself. Could be funny, something we wouldn't expect.
Yeah. Well, the thing I always tell people that some people know now, but I'm blind in my left eye. I've been blind in my left eye.
Oh, wow.
My life. So it was a challenge for sure. And I like to think that one day if I ever get my eyesight back in my left eye or ever have eyesight in my left eye, then my world is going to expand by 2x. So I'll have 100% improvement in world. But yeah, that's an interesting fact. So don't jump up on my left side. That would be a little quick.
So my question about stock market, right? So personally, I was heavily investing in stock market from 2011 to 2015-ish. And then I was doing a lot of options, futures, Forex, and then decided to get out of it because I just wanted to, enjoy my time. I didn't want to keep watching the stock market 24 hours a day.
Yeah.
So do you, but I saw that you mentioned that you do, of course, option trading. You're the CEO of Options Alpha, but you also invest in real estate. So how do you compare both the assets?
I think I take a approach that pretty much everything is very similar, on the surface level. I mean, everything is risk and return and duration and holding period. And, it's just managing and juggling all those different components. So, I do real estate. My wife and I do real estate. She's more of the real estate side now, and she kind of manages the real estate. But even within real estate, we have single family homes, we have vacation rentals, student rentals. I'm an investor in a bunch of syndications. I invest privately into REITs and single unit, triple net properties. So we do a lot of that stuff on the real estate side. We will fix and flip a property here and there. We'll do commercial property. I mean, we still niche down into the different, demographics or the different components of real estate.
Right.
But then I'm also an angel investor and a venture investor in companies. So I'll be a seed round or, kind of seed plus round investor in companies. That in addition to options trading and regular investing. I mean, I look at all of them as how can I build the most robust wealth portfolio, if you will. And, they each have their own group and category, but I'm very much a believer in seeding different things and then letting it grow by itself. So the money that we've for real estate, for example, we invested in real estate 7-8 years ago was when we started. Actually almost 10 years ago is when we actually first bought our primary house and then converted over. But I look at that and I say, okay, that was money I seeded in that stuff. And then everything I've, gotten from houses that we've sold or rental income, whatever, I just reinvest into that same asset class, right? So they all kind of grow on their own without this continuous investment. And that's how I look at anything else that might, come along. So it's not like every month I'm taking $200 and putting it into real estate. Real estate was funded years ago and just continues to grow. And that's how I look at it.
That's interesting. Also, you are very well diversified. And I always talk about diversification is the key because most of the fund managers talk about diversification, but then they only tie you into a stock market. You are still tied to Wall Street. But, now that you are in real estate and on top of that, you have diversified in different asset types as well as investment types, from syndications to triple net. And I believe in those. And on top of that, you mentioned the seed investing. That's interesting because I come from startup world as well. So I'm always excited about it.
Yeah. Well, that's been fun for me over the last couple of years because, Option Alpha was, kind of came out of nowhere. I had no intentions of Option Alpha becoming what it is. But now that it is what it is and, Inc. 500 company twice and growing at a really good pace, I feel like I have at least a little bit of insight into maybe what things may or may not work, but
Right.
ultimately it's still a, speculative bet. So it's a small seed investment, and maybe I can offer in many cases, advice or consulting or like
Right.
direction to companies, hey, don't do that. Like we tried that for 2 years and that didn't work.
Right.
So
Yes.
where I feel like I can add value, I think that helps.
That's awesome. So how did Option Alpha started?
So very much a organic thing. When I left New York and went to BB&T in DC as a REIT
Oh, okay.
analyst, had ideas about trading, wanted to trade more, really had my hands tied for trading, for the most part as an analyst, for all the security stuff, but really started to get deep into options again and understand more about options and kind of try to find the thing that worked for me. On my side, Option Alpha was just a blog for me to chat, by myself. Are you there? Oh, there you go. You're back.
Yes. Yes,
So
I'm.
Option Alpha was originally just a blog, and it was on the old Google Blogspot, if you remember that,
Oh, wow.
right?
Okay.
Okay,
Yes.
so that's where it started. And I knew that I needed to journal my thoughts. And some of the original blog posts are, 2 or 3 sentences, you know, I was either frustrated with the market or, happy
Right.
that something happened or, just pointing things out. So eventually people started asking questions because there weren't that many blogs out at that time. And I started answering questions, and then people asked more questions, and I got the same questions over and over again. Somebody said eventually at some point, probably, hey, why don't you make a video? So I made a video to answer questions on, what is delta, or what, how do you choose a strike price? What is an expiration month? And I started making all these videos, and I would send out an email with, 40 or 50 links to videos. And I distinctly remember somebody saying, it would be really helpful if you just put this into a course, like a
Right.
video course. I was like, well, yeah, that would be helpful because then you would stop emailing me and
Right.
you wouldn't email me anymore if it was there. So we put it into courses. People started asking for software. I mean, and so that really was and continues to be the progression of Option Alphas. This relationship between me and people out there, which I really enjoy. Them asking questions, us trying to figure it out. If we have the answer, point them to the right direction. If we don't know, feel like we could add research or build a piece of software, then we do it. And so now we're more of a software research-based company, but still very much have our roots in education. So
That's awesome. So let's jump into the options market, right? What are stock options?
So stock options, it's really simple on the very high level, and that is that they are a contract that derives its value from some underlying asset. And so I always explain it that way because the options market physically sits on top of the underlying securities and the underlying assets like stocks,
Right.
ETFs, indexes, commodities, futures, all that. You
Yeah,
still
all good.
have the options market on top of it. And it's just and I don't know how much time we can get so far into the weeds here, but the options market is just a way to trade a product that is leveraged, which is the
Right.
important point.
I
Trade
was
a
going to,
product
man. Yeah.
that's leveraged that controls an asset or has some sort of properties around controlling an asset for obviously a reduced cost. So as I always say, leverage is like medicine. A little bit can help, a lot can kill you. And I feel like people
Right.
see the leverage and the price of option contracts and they, generally understand it, but then they overdose, with
Right.
leverage and
Right.
risk, which is where they get hurt. So options are wonderful because they can create complex payoff diagrams. You can really kind of manipulate and maneuver the payoff of a potential trade or, a series of trades.
Uh-huh.
And I feel like to me, what's always been attractive to me about that is the ability to control the environment to some degree on what and how things work. So,
Right. So yeah, pretty much stock options in my world, and I'm just trying to tie it to real estate that if you want to buy Amazon stock, $3,000. If you want 100 stocks, it's 300 grand. You don't want to put 300 grand, right? So you end up buying a call
yeah.
for maybe 10 grand or something like that, 5, 10 grand. I don't know what's the value today. 10, maybe it could be 15 grand. But it's the same way in real estate, when you are acquiring $1 million property, you are putting 200, 300 grand down and the rest is carried back by bank, right? So
Or you could
options are
say,
similar.
yeah. The analogy I use often is just like a wholesaling contract, right? So like you can get a contract wholesale on a house
Yes,
where
that's
you
true.
get the contract signed, and then you can sell that contract and it's still tied to that same house, right? So it's just the trading of the contracts back and forth. Might be a more, synonymous. So.
Right. No, that's a great analogy, actually. So what are different ways option investors can make money?
I mean, look, the idea with options is, and if people really get into it, like I said, options are really unique in that, let's take stocks, for example. So stocks are one directional, right?
Right.
They're really easy for people to understand. There's only two ways to make money in stocks, and people don't actually know this. I'm not used
They
to
don't know the
this
second side.
right.
Buy.
You either buy low and sell high, or sell high
Right.
and buy low. So you either have to do one of those two in order, right? And so the same concept holds true with options, except that you can create payoff diagrams by combining different components of option contracts, calls and puts, short and long. You can combine calls, puts, short, long, all in the same strategy to build payoff diagrams that ultimately profit from whatever environment you think that a stock might go through or an index might go through. So like, I'm a real big fan of trading neutral risk-defined strategies. So I build a payoff diagram that says, okay, as long as the stock stays between X level and Y level, then I can make some money, right? I don't care where it goes. I don't care if it goes more towards X or more towards Y. I don't care if it pinballs back and forth. But as long as I can build a payoff diagram around that, structure, then I'm comfortable taking the risk. And the beautiful thing about options is that when you have an environment like that where you can control the payoff and you can control the components of risk and reward, you basically can figure out what the expected outcome of a position is versus guessing more or less with stocks. And so when you control the expected outcome, now you have something extremely powerful, which is, exactly, or have an expectation of how much it's going to win and how often it's going to win. Now you can reverse engineer an entire portfolio to do things really, really that you couldn't do in a regular stock position. So that's why everybody should be trading options.
Right. So, and when you mentioned about neutral, are you talking about like strangles or straddles, iron condors?
Yeah, those are components. Yeah, so strangles and straddles are undefined risk. I'm more of a iron condor, iron butterfly.
Yeah, iron butterfly, iron condor. Then you exactly know how much you're risking.
Yeah.
So that was going to be my next question. I invested in options heavily in 14 and 15, and I thought of it as gambling, right? So how do you de-risk yourself? And you kind of mentioned about iron, flies, etc. But what do you actually look for in the options, and how do you look at IVs or etc. as well?
Yeah, I mean, one, you don't look at it as gambling, right? So like that's that would be the first thing is, right, don't look at the market as a gamble, because if you look at the market as a gamble, you're going to behave like a gambler. My thought process on options trading and all investing in general is that there has to be a positive expected outcome. And so if you can't derive mathematically what the positive expected outcome of a strategy is over the long term, then you either shouldn't trade that strategy, or you should try to understand how you can generate a positive expected outcome. So if you have that lens, which is what I don't think that a lot of investors, use as their lens for evaluating positions, portfolios, and this goes for stocks or ETFs or real estate or options or whatever, unless you have a positive expected outcome, you shouldn't be trading. So my concern with a position is not necessarily what is the implied volatility level. What are the technicals showing me? What is the market doing? I'm more or less concerned with, is the strategy that I'm using in all environments or in this particular environment or environments like this, does it generally generate a positive expected outcome and a margin of performance, so much so that I could rely on that moving forward? And if it does, then I'm more willing to entertain the trade than the alternative, right? So I think that's the lens I look through it. And you could then take that and extrapolate it to any strategy, right? So a lot of people say, well, I like to, buy long calls and buy long puts. Great. Just find a version of that actually generates a positive expected outcome, which is hard to do, and use that as the basis for your trading. Don't just go into the market and say, okay, what looks good today, right? Like we've all been to the supermarket when we're hungry, right? Where we go to the store and we just go, we're really hungry and we go up and down the aisles. We don't really think about it. We just instinctively buy whatever looks good. People do that in trading, and that's obviously a recipe for disaster. They just
Yes.
walk up and down the aisles and, the tickers, and they just look for things that look attractive, or, they hear some hot tip and then they go do it.
PE, PS ratios
Yeah,
and
yeah. And it's
whatnot.
all the same. Yeah, all the same stuff that gets us in trouble.
Yeah, exactly. Hey, so I'm gonna throw a curveball at you. Today is July 31st. Yesterday, Amazon and Apple announced their earnings, and of course, I didn't invest, but I know a lot of people were uh, expecting, the outcome. What we are seeing, that Amazon and Apple will go through the roof.
Sure.
If you trade earnings, how would you have traded, let's say, Amazon or Apple?
Yeah.
Using options.
So
Or
here's the
most
thing.
probably you did. I don't know.
No, I don't trade earnings on
Okay.
on securities, and this is an important point.
Yeah,
So
that's scary too. Me too.
yeah. Well, here's the thing, right? It's an entire, it's an entire move compressed into a minute, or a fraction of a minute. So that's the first thing. Second thing is, we've already done a lot of research on earnings trades, and we know basically two things happen. One, there's a 50-50 shot of the stock going up or down.
Exactly.
And I say that, and people go, yeah, but it's Amazon. Yeah, but it's Apple. No. We tested all those as well. It's a 50-50 shot of it going up or down.
Yep.
And then the move from the open to the close is also a 50-50 move.
Right.
So if Apple opens higher, there's a 50% chance it closes higher. If Amazon opens higher, it's 50% chance it closes higher. To me, there's no statistical edge in trading earnings. One, they come around way too infrequent to make them, for me, something that I can rely on time and time again.
Right, that's true.
Because you go through an earnings cycle, it takes 4 trades to get through an entire year. So in a high probability mathematical based model, you would need, probably 30 years of data to see if it really worked, right? To get enough trades to actually mathematically figure out what the returns are going to be. So it just takes too much time. So, I mean, look, I'll leave that to people to gamble and, make a good choice. Great. Awesome.
Yeah.
Good for you.
Yeah, but see, 50% of the time you could be the best, right?
And 50% of the time you could lose. The problem is like, so for Amazon and Tesla and things like that, some of the strategies you could have tested on those had the best returns. Like when you looked at the end of the testing period, they had the best returns if you, bought a long call option, whatever.
Right.
But in many cases, your drawdown was 5 years, right? And 70%. So I tell people, like, it's easy to look at things, empirically and say, oh, you could have done this and done well. Yeah, right. But you would have been an idiot to go through 5 years of drawdowns and 90% of your capital. Like nobody would have, done that rationally, right? They would have bailed on it. So I think it's insanely hard to do.
Well, that's great advice, by the way. So another question I have, what do you personally look at while you are looking at the option strategies? I now figured out that you don't do earnings. Mm-hmm. Are there any other things you look at when you are figuring out this option strategy? Of course, how the stock is moving, or how the entire market is moving?
Right. So you think about it this way, right? The best portfolio, so discounting options for a second. When you build out a portfolio, what do you want to do? In a portfolio, you don't want to have asymmetric risk, right? You don't want to have this systematic risk that's inherent in the market. So you try to remove that by diversifying your portfolio. You don't just invest in one company, you invest in 2, but you don't just invest in 2 social media companies, because that's one and the same. That's basically investing in one company. You take some, macro companies, some micro, small caps, you take some emerging market, you take some bonds, some stocks, et cetera. And the reason you do that is because you want as much uncorrelated risk as possible, right? You don't want all of your trades focused on Tesla and Apple and Amazon, because in the off chance they go really bad, which happens a lot, then you're screwed, right? So I take the same approach to options trading, which is that I want to have a portfolio of tickers in my portfolio that represent those different industries and sectors, just like what you would naturally do with the best portfolios around the world. So you take emerging markets and gold and bonds and US stocks, large cap, small cap, tech, utilities, biotech, retail, right? And I want to trade those consistently throughout my portfolio. So my thought process on it and what the research for sure suggests is that doing that on a more systematic basis, where you're just coming in and making systematic trades because you know there's an edge and you know that you can help, capture that edge by trading a diversified set of positions, it makes the whole process, honestly, of what do I trade and how do I trade a lot easier, because you've already predetermined what works. Now you just actually have to execute the orders. So very rarely do I open up my trading platform and say, okay, what do I trade today? Is the market bearish or bullish, right? It's already premeditated. I know exactly what I'm looking for. I go in, I make my trades, and I get out, right? And it takes, 15 minutes to do it, because it's not that I know exactly what to look for. I don't have to go hunting for it.
Okay, no, that's interesting. So, and how do you manage your options, right? Because when I was doing it, I was always watching the market, and that was another emotional drain. But do you put stop loss and don't even
No,
look
stop
at it,
losses are
or
terrible. Yeah,
yeah,
stop losses are terrible. I would truly encourage, and all the research suggests that, not only from us, like we've done more research on options trading than anybody else out there for sure. I would suggest people go really look up this stuff, because not only us, but other people have also, done research, beyond ours, or I guess next to ours, and said, yes, stop losses are not, something you should use. So one, you don't use stop losses. Two, you have to use a strategy that, again, generates a positive expected outcome if you were to do nothing, right? So this is what I try to tell people is if you have a strategy where you do nothing and you eventually get paid, okay, now you can do absolutely nothing. And so anything you do to improve the performance of that is just icing on the cake, right?
interesting.
So if you take a piece of real estate, for example, if I put my money into a syndication and I generate a 6% return or whatever it is, I do nothing and I get 6%.
Right.
If I'm going to do something, like sweat equity, labor, manage a tenant, manage a whatever, I should earn more than 6%.
Yep.
But I may only earn 8%, right? So my additional work that I'm doing, the more movement that I have, should be icing on the cake compared to doing nothing. That should be the gold standard for traders, especially in options trading. Find strategies that if you do nothing, it generates money. And that's how you, break this cycle of having to manage positions all the time.
Yes.
And I feel like a lot of people, what they do is you heard the analogy in real estate, like lipstick on a pig.
Yep.
Like a lot of traders, what they do is they find a lot of pigs, and because they don't know what they're doing, and then they try to run around and put lipstick on all these pigs, and that gets tiring. Like I would imagine chasing pigs and trying to put lipstick on them is tiring all the time. Instead, find positions that are fundamentally sound based on mathematical expectations, then slightly tweak and improve those positions by making rational adjustments, reducing risk when you can, managing trades early, taking profits off the table. Like all of those things are just icing on the cake. Does that make sense?
No, that does make sense. Now that I'm, because I'm just going back to my time, 2014,
Yep.
15. I used to use Think or Swim, and they had really good probability, right?
Yep.
You could figure out how it would work. If I move my, strike price to this, what would I expect? So I was just trying to think about that. So do you use, or I'm not gonna say recommend any trading platform,
Yeah.
but which trading platform do you use or like?
Yeah. So I would dare to say I was probably one of the first 100 clients of the original Thinkorswim platform.
Oh, so you know the guys,
Yeah.
Mike. So I met both of them, Mike and
Yeah.
so yeah, they started new business now too, right? So they
Yeah,
have new
yeah. So I
software.
still use, Thinkorswim. We
Yeah, it's
still use and
amazing.
recommend, Tastyworks and all those things.
Oh yeah, Tasty Trades.
Broker,
Yep.
yeah, broker platforms are, to me are becoming more of a commodity, right?
Right, right.
So we're actually building in conjunction. We have a partnership with the TD Ameritrade and Thinkorswim, where we're actually building an auto trading platform that we're going to be releasing soon.
Oh, okay.
That takes a lot of these components and gives you the ability to build with no code, just simple frameworks and bots that run this analysis for you. So we're going to be launching that soon, and that will basically sit on top of all of these other broker platforms
Nice.
that are out there. So to me, all the broker platforms,
Yeah, now they have
they do
evolved,
the same
right?
stuff.
Yeah,
They do the
at
same
that
stuff.
point, when TOS or Think of Swim started, it was amazing because
Yeah, they haven't updated it at all in 10
No,
years.
no, they have not. It's still the
So
same. I
it
think
is
maybe that's why
exactly the
they
same.
left and started Tasty Trade. So I went to that Tasty Trade office in Chicago when they were starting. It was amazing.
Yeah.
No, that's great. So, what are some of the advice you would have for beginning option investors?
I would say, we already talked about the positive expected outcome,
Right.
right? Test your strategies. There's no reason to, fumble through this and not test something out before you actually put money at risk. I feel like it's the easiest win you could have is to, back test a strategy, run a
Yes.
strategy through a back tester or simulator just to see what it would do, right? Because you don't know until you actually see what the math and the numbers are behind it to know if it's going to work or not. So I think that's an easy, quick win for you that you could do. The second thing is you always have to understand where the trade-off is. And I talk about this often, which is there's no free lunch in the market, right? So
Uh-huh.
there's clearly a trade-off in everything you do for
Yeah.
investing, whether it's real estate or stocks or venture or angel or options. So you have
Right.
to understand both sides of the trade-off. You're getting something, some benefit, some reward, but you are giving up something, right? And so what is it that
Absolutely.
you're giving up? And I think if people understand what they're giving up, then they'll be better investors across the board.
What are some of the gotchas or pitfalls of option investing?
I mean, leverage is a pitfall, right? Following, news. Unfortunately, right now there's there's
Oh, it's even
massive
worse,
communities.
right?
Yeah, well, there's massive communities right now
Yes.
where, you can get into Facebook groups where people are posting
Yes.
their things, and it's almost become, unfortunately, a game to see, how much you could make or lose in a given day,
Hmm.
like, regardless of the sound strategy. So, my gotcha for like investors is you really have to drown a lot of that out. It comes back to very old school mechanics of managing risk, building a portfolio, working a strategy, right, and sticking with it for a really long time.
Right. And that's a great point, right? Pretty much cut out the noise because right now, if you are following the news and lots of, because I keep getting emails, right? Lots of this traders or gurus, they provide this copy trade, trade alerts and whatnot. Then you
Mhm.
are just blindly copying what they are doing without even understanding the inherent risk as well as you said, the expected outcome, right?
Right. Right. Build a strategy. Yeah. I mean, I think it's okay to watch, what people do.
Right.
And like, I certainly like watch a lot of like, how people behave and how they act, but that doesn't mean that you act on all of it. Right. Because,
Right.
you might be different than me or someone else might be different in expectations. So I think it's just the understanding component that's missing.
Exactly. Yeah. So no, that's right because all of us have different risk tolerance.
Sure.
Yeah, different net worths, right? How much risk can you tolerate? Even if you have risk tolerance, maybe I can tolerate still much higher risk than someone else, right?
Sure.
So that depends. Because recently, one of my friend, and she just called me 3 weeks ago and told me, oh, her husband, they both retired. They took early retirement so they can enjoy their lives. I think they are in their early, not even, yeah, 55, 60s. And then she called me that during that market crash in March, her husband had put like 200 grand in options and pretty much lost all of it. And she's like, now I got to file for unemployment somehow. I'm like, oh no. So of course we have heard all those kind of stories, but
Exactly.
any success stories as well as horror stories you can highlight?
No, I mean, look, I'll say this. I mean, I've always said for a long time that, uh, and before this, I would say, my thought process on options trading and education was, this is important stuff, but it's not life or death, right? But
Right.
I've changed my tune on that because, as many people may know, or if you don't know, you can go look it up. But there was a young Robinhood trader who got
Oh
into a
yes.
situation where he had a spread and one side of it got assigned. And for whatever reason, he didn't understand that the other side of the spread was protecting him. And so that lack of education and frankly ignorance of the position and what was going on, you know, conceivably led him to kill himself. That's what the the
Yeah,
news
he
was,
had like 70
right?
grand or something. I'm not sure. I can't
Yeah.
remember,
So,
but
but but it wasn't actually a big deal if he just understood what was happening, what was
right.
actually happening in the position. So I feel like there's a big part of me that says, the most important thing that people can do, and even to use your friend as an example, though I don't know the situation, but just understand like what is going on. Like there's no rush. There's always another opportunity the next day,
Right.
right?
That's
There's
that's a
no
great point.
rush
It's
to get
always
into anything, right? Nothing. There's no rush to get into anything. So I feel like that's, insanely important now, is to, to have that backdrop of understanding. It's like, this is now life or death, if you do this right, you'll probably do okay. If you do this wrong, like it has very much a domino impact on your life and your family.
so. No, that's a great point as well. So I know in March when the market started correcting, that was one example, but I have heard from a lot of people they were caught with their pants down. How did COVID affect your business as well as investments
Yeah.
during that
So,
time?
yeah. So we'll talk investments first. There's a lot of categories of it because we do a lot of stuff, right?
Right, you do.
So the option side, we were pretty public last year, at the end of last year, not only posting videos, but posting the research, very public about our opinions on the market being well overdone, clearly did not know what
Yes.
was going to happen. But we started executing a VIX hedge strategy, so a tail end
Oh,
strategy at
yes.
the end of last year. So needless to say, it would end up being good timing, very lucky timing that we started doing that back in October, November, and then the market crashed in March. And,
Right.
we survived that environment actually really good, like, very small little blip drawdown, a couple
Right.
percent and done. And so we were good on that end. Real estate wise, we have student rentals, we have regular rentals, we have vacation
Right.
rentals. The student rentals are still up in the air because
Right.
classes are back or not. But
Vacation rentals.
yep, but we have syndications where we invest in mobile homes and other apartment buildings. Those
Right.
have been great. Vacation rentals have been amazing because nobody's flying, so everyone's driving to vacation destinations. Those have been incredibly well. So, I mean, look, this is why you have a diversified portfolio,
Right. Oh,
because
yes.
some
It's so
things go down and
important.
some things,
Of
work out
course.
well. Yeah. So, and then a couple little startup things that we invested in, of course, didn't survive that. Didn't have enough
Right.
capital to survive. So, unfortunately,
Uh,
those kind of went bankrupt. But it is what it
yeah.
is.
Yeah. No, that's great. And by the way, I'm closing on my first mobile home park on Monday,
Nice.
August 3rd, and then the senior housing facility in about 10 days.
That's
So,
cool. That's very
yeah.
cool. Yeah. Senior
So
housing is
let's
nothing I have right now, but I'm
Yeah,
interested.
yeah, we should chat about it at
Yeah.
some time. So, what's your recommendation about stock market in near future? You have your crystal ball ready, right?
Right over here. Right over here.
No,
Yeah.
because I have the same thinking as you, and I know a lot of them, a lot of the people as well. That stock market is done. We think of that way, but that right now, just the free money, the inflation, the dollar devaluing, all of that is somehow keeping it up. But what do you think? What could happen?
Yeah. I mean, like I reserve that prediction right to guys who are probably at a different level than me on that end. I mean, my portfolio is such short duration that it turns over every month with new trades that I can
Okay,
go wherever the market goes. However, I think that Ray Dalio's most recent piece
yeah,
about the devaluation of the currency and any entity or government being able to not only devalue their currency but then pay their debts in their own dollar
right,
denominated
yep,
debt, I think is really interesting
yeah,
because on the outside people would potentially look at this market and say this market's way too hot, which I think it is, and valuations are way too high, which I think they are. But we have an extremely aggressive Federal Reserve policy
yes,
that seems to have no limit. And they've said that they have no limit to what they can do or what they will do.
right,
And until the point at which the world stops accepting our dollars and market denominations change to a different currency, I feel like we're going to see equity prices continue to go through volatility, but continue to steadily rise until some other catalyst breaks that back. So I think the moves in gold have been interesting. I think
yeah,
finally you're seeing some moves in like cryptocurrencies like
Yeah,
Bitcoin.
finally, man. I got a
Yeah.
lot.
Yeah. So I think that those are interesting, but
Yeah.
at the end of the day, we have no idea where it's going to go. So.
All right. No, that's a great answer, by the way. So let's take a quick break, and after the break, we'll go through 5 round. Welcome back to Wealth Matters Podcast. I have with me Kirk Du Plessis. He's from Option. He's the CEO of Option Alpha, and we discussed about option strategy as well as how the stock market is reacting or may react. So, Kirk, are you ready for the 5 round?
Let's do it.
Okay. Would you be changing any business or investment strategy after coronavirus?
I think the only thing that we're changing is we were pretty much already. We were a remote company. We had a couple people in a little office. We shut down that office. As a result of this, everyone's now remote completely. But I think we've already started to make a shift in our business. Last year we started to become more of a software SaaS, based business. So we'll continue to do that. Investing wise, no real change. I mean, like everything's pre-calculated for me. So it's just continuing to work it. I feel like some of these alternative, currency type things like the cryptocurrency stuff. I'm fascinated by it. So I don't know where it'll go yet. It's definitely a hot news story, but as far as like market cap, compared to everything else, it's still insanely small, but
it's nothing.
But I'm watching it. I think
Right.
I'm fascinated by it.
Yeah. So favorite investment or finance or any other related book?
Yeah. I mean, I don't know. I got a whole wall of them here, honestly, but, the ones that I would say are probably my big ones. We did a interview with Richard Hudson, who is the co-author of a book called The Misbehaviors of Markets.
Okay.
And this was really the precursor to Nassim Taleb's The Black Swans. Mm-hmm. But I think people should understand, and that would be one of my recent favorites, is people should truly understand the risk inherent and the fact that in many cases models do not predict the risk. It's why we saw the market crash, and that was that crash statistically based on every, financial model out there should have never happened ever in the history of humanity in the world. And, beyond the dinosaur, it should have never happened, but it did. So I think understanding those black swan events is extremely important. So I would say that one. I'm a big fan of The One Thing by Gary Keller.
Oh yeah, that's amazing.
I'm a big fan of John Bishop. And his books as well. So yeah, I mean, I could go on and on.
Okay, I'm gonna look up. So any tool or website you recommend other than Option Alpha?
Yeah, no, I wouldn't do that right away. I think the interesting stuff that we're seeing now, man, technology is moving so fast. I think the whole no code development that is really taking hold. And I'm glad that we've been a part of this to some degree with, like the foresight of seeing like how things will develop into no code. But there's a lot of websites that are being built and a lot of technology that's being built where it's basically giving people the ability to build the tools that they want to, use. I think anything in the no code environment right now is extremely fascinating and is really, really interesting to me. So that's not one single website, but there's a lot of that community that is starting to build. So
yeah. How do you give back?
Giving back. So we do a lot with our local YMCA. My wife's on the board of the YMCA here. So we're in a small town outside of Pittsburgh. There's not a lot of industry. There's not a lot of business in this town, like a typical city, like your city, like in San Francisco. So we do a lot there. And then we do a lot through our church and through other organizations that are through the church.
That's great. How can my listeners reach out to you?
Just head on over to Option Alpha. We have everything for free. All of our courses and training is totally free. Never have to pay us anything. Come in, use and abuse it as much as you want. And hopefully get some good stuff.
Thank you so much, Kirk. I thoroughly enjoyed the show. Have a great weekend.
All right, take care.
Bye.